Welcome to building the premier accounting firm, having a successful accounting, bookkeeping, and tax business. I'm Roger Knecht, president of Universal Accounting Center, and I'm excited to have you listening in as we have this great discussion about how you can work on your business. One of the things that I'd like you to know about me is I've been working with accounting professionals now for more than 20 years, helping them start and build successful accounting businesses, providing the quality accounting services that they would like to offer and get paid what they're worth. I invite you to also listen to our other episodes. We have a variety of topics that we cover that are related to things such as marketing, selling, offering quality services, expanding your business, getting into value-added services, and so forth. We also do this with a number of guests that I'm sure you'd like to actually get to know, and for that I invite you to also subscribe to our podcast. This podcast is sponsored by Universal Accounting Center. It's an accounting school for accounting professionals to help them enhance their skills and actually specialize in very specific services, such as getting training, coaching, and mentoring in things such as bookkeeping, accounting, tax, consultative services. Check out Universal Accounting Center and see what it can do for you, your staff, and your firm to help you actually become the firm of the future. With that in mind, I am excited to have today Brandon Hall. He actually owns a virtual CPA firm that he started in 2016. In 3 years, he scaled it to over $1.5 million in revenue with 12 employees. Brandon is a certified public accountant, national speaker, and is the founding CEO of a real estate CPA firm. Brandon works with real estate investors, syndicates, and private equity funds to optimize tax positions and streamline accounting and business function. He believes that real estate investing is critical to building sustainable and generational wealth, and Brandon worked at PricewaterhouseCoopers and Ernst & Young prior to launching his CPA firm. Hall CPA PLLC, Real Estate CPA. Through the knowledge he gained by working with real estate investors, Brandon invests in multi-family properties personally and through his capital group, Naked Capital. So, Brandon, welcome to the show.
Thanks for having me on, Roger. I appreciate it.
Yeah, this is going to be kind of fun. So there's a lot of things I'd like to discuss, but honestly, I want to get to the beginning and really find out what got you excited about becoming an accountant. Why an accountant of all things? How did you pick this profession?
I honestly, I think that I was in college and I liked economics, I liked finance, and I took a couple accounting classes, and I was like, oh, these are easy classes, and grades were really good. So I was like, I'll do this and minor in finance, and so that's what I did.
Excellent. So we'll just consider that you stumbled into the profession.
Stumbled into it. That's a good way to put it.
So when you finished your degree, obviously you got more on a traditional path in accounting. Tell us about that early start after college.
Yeah, well, it was interesting. So I went to East Carolina University, and they're not really a feeder school to the Big Four or anything. So it was I kind of had to take my fate into my own hands and network my way into a job. And that's what I was able to do, at least network my way into a couple interviews with a couple of the Big Four firms. And once I started off in federal advisory. So moved up to DC after college. We were consulting on all sorts of interesting things. Well, I guess some more interesting than others, but so started off in federal advisory, and I was probably 3 months into it and just kind of realized this is not a career path that I want to go down for any sustainable period of time. I was very bored, and I was never really receiving any sort of positive feedback or anything like that from my manager or superiors, and it just was not an exciting environment for me. So started trying to figure out what I could do to get out.
Now, that was pretty early on. I mean, you're talking months into the process, so you can definitely see the frustration, but what caused you to think that the option would be starting your own business? Why that choice?
Well, so I did the whole find your why and your passion and all that stuff at the time, because I was just so demotivated going into work every single day. At the time, PwC, and I did not want to. I could not see myself doing this year after year after year for a decade, and hoping that I rise through the ranks and eventually make partner. I just couldn't see it happening. So I started looking for a way out, and I found a couple things. The first thing that I found was real estate, investing in real estate, and becoming a landlord. Buying rental properties and building out streams of cash flow. And then I started looking a little bit more, and I kind of realized that I could start a business. I could look at different opportunities in business and potentially be a business owner. And I'd always had a little bit of an entrepreneurial spirit. I did the whole mulching business when I was in high school, and in college I tried to start up like a t-shirt company, which flopped pretty quickly. So there was a little bit of discovery that was going on, and I was trying to figure out what type of business do I want to run. Could I launch it on the side as I work here at PwC? And I remember talking to I was talking to somebody at one point, and I was like, I might just start a CPA firm. And I didn't really like the idea at the time, because in my mind, a CPA firm takes decades and decades to scale. I had zero interest in running a business where I was the sole person and had to do all the work. I wanted to, at the time, my vision was, I'm going to build a business that's automated and scalable, and I'm going to sit on the beach because that's what I want to do. And I couldn't really see that happening with a CPA firm, but the passion for real estate kind of just fell into starting a CPA firm with the passion for real estate. So.
Well, it sounds like the career you had with your degree and the interest you had in the real estate industry kind of merged together. It allowed you to be the real estate person that you are describing, but at the same time, have a CPA firm at the same time. You grew it quite quickly. What do you think is unique about your firm? What do you think that an outside person looking in would notice about your firm and how it's different?
Yeah. I think that they would notice that we are 100% virtual. We don't take, there's no paper. I actually had a client mail me paper one time, and I warn all clients, if you mail me anything, I will mail it back, and then I will terminate the relationship. I've only had to do it once, but I did do it. So we're 100% virtual, 100% remote. That's the first thing. But the second thing is our go-to-market strategy. It's very different than most CPAs. Most CPAs focus on referrals, and I knew very early on that if I wanted to scale this thing fast, I was very young, and nobody's going to refer a 25-year-old CPA who has zero experience, theoretically, and is striking out on his own to start a CPA firm. So what I did is I started content marketing. I didn't realize that it was content marketing at the time, but I loved writing blogs. I loved running a podcast, and I loved being guests on podcasts such as this. And what I did is I found a website called biggerpockets.com. I started posting in the forums all the time. Then I emailed them, and I was like, you only have one CPA that writes for your blog. You need another opinion. And that got me in the door to write blog articles for them. And I wrote nonstop. I wrote blog articles. I wrote in forums. And that's how we scaled. The difference with our approach is that I would rather spend an hour of my time writing a blog article that's going to be viewed over the course of like 3 years. It's going to be viewed by 10,000 people versus go to the local, Chamber of Commerce meetup and hope that I can get out of my introvert's shell and come out of the corner and talk to people.
So what I think you're describing is something that people hear about. People hear about content marketing and blogging and so forth. You've done it. Help draw the line for the listeners as to how, as a CPA, a person reads your article and ultimately becomes a client. Can you help illustrate for us how someone could see that transpiring to now an engagement?
Yeah. It's actually kind of hard to track. We're actually just figuring out how to track it. So we recently picked up HubSpot. Well, not recently. I mean, like 12 months ago, we picked up HubSpot, but we're just now sort of fully integrated into HubSpot, and we're now able to see which content drives what leads and where people are coming from the different campaigns that we're running. So, I mean, that was 4 years into my business before we actually started tracking it. I just knew that if I got some good content, chock full of examples in places that people were looking for it, then that has a much better chance of success to scale than anything else that I could possibly do. And one thing that I noticed really early on was that, at the very early stages when I was just awful at one, being a CPA, and then also two, doing sales calls. My sales calls used to last 2 hours, which is ridiculous. But at the time, I was just like, oh, I've got somebody on the phone. I need to answer all their questions, right? Give it all away for free.
Yeah.
And what I would do is I'd be like researching their questions while I'm on the phone with them. And I would find a lot of CPA blogs, and they were all great. They all heavily cited, really well written articles. But what I realized when I started writing my own articles is that my clients don't have that level of sophistication to type in the appropriate keywords to find those CPAs articles.
Uh-huh.
So those CPAs are writing great articles. They're full of technical citations, which is awesome. But who is finding those articles? The other CPAs that are looking for the answers, right? And I'm never going to pay another CPA to do anything related to my taxes. So I dumbed it down. I dumbed all of our content down. I specifically went the no citation route, and I used a ton of examples and storytelling in our content, and it worked.
So here's one of the things that I think is then important is with this content marketing, you're speaking in a language that the business owner is now able to identify with. So the articles are different than what you're saying the CPAs are traditionally writing. The other thing, though, I presume that you've done a good job of identifying in the article how to let them find you. So they read the article. What's your call to action? What's your means of then getting them to find you so that they can become that lead? What's that process look like in your articles?
Yeah, well, at first, when I was writing for Bigger Pockets, that's expressly prohibited. So you're not allowed to throw in any sort of call to action. So with that, what it became a game of mass production. I want to be on the newsletter every single week, and that typically means writing 3 to 4 articles a week for Bigger Pockets so that I can get on the newsletter. They put the articles on the newsletter that have the most views for that week, right? So that's the game that it became, and then people just started recognizing me, and
bingo,
and that is my name would pop up, and they would go, "Oh yeah, Brandon Hall from Bigger Pockets." Like that's who that guy is. And you're able to like throw things in your forum signature and things like that. So I would always have my website there, and people could click through to it. But now we definitely have calls to action, and we've got a 10,000 word, what we call it, the ultimate guide to tax planning for landlords, and it's a 10,000 word article that we've made a PDF downloadable version, and that's kind of our anchor call to action whenever we're producing any sort of big time content that we're trying to drive leads with.
Exactly. So for the listeners, what they're understanding is in some platforms, you're unable to actually do any direct promotion. And so there's no form that you can put, no real call to action. But because of the frequency that you're doing this, you're becoming the perceived expert. And because of the frequency, your name becomes recognized. And now in other platforms where you are able to actually do call to actions, you have something that is a free offering that they're able to ask for and easily acquire. And in so doing, now they're into your sales funnel. And being in your sales funnel, you can now nurture them accordingly. So I like how you've explained and introduced that so that the people can understand how you've used this in your marketing method. So
just a real comment on that too.
Go ahead.
I think that a lot of CPAs, they start writing and then they get really discouraged by it. So they might write an article or two. And the thing is that that's just not enough. You really need to be really consistent for at least a period of 6 months before people are going to be able to recognize that it's you over and over. And if you don't believe me, I guarantee you that most of the listeners that are listening to this podcast know who Tony Nitty is. Look at what he does. He writes for Forbes. He writes for Tax Advisor. But he's just very consistent. So anytime that his name pops up, or anytime an article pops up, you can tell by the article. You don't even have to see who the author is now. You can, if you've read enough of his stuff, you can tell it's him. But like I can tell you all sorts of different articles he's written on Tax Advisor, and I couldn't tell you all of these other great articles that I've read on Tax Advisor that were written by CPAs that just did a one-off article. And I think it's just important to understand that in terms of branding yourself and branding your firm, you really need to be consistent with the content.
Yeah, you end up with a very distinct voice, and people will actually be drawn to your writing style. They will, you'll find people actually appreciate what you're saying in the way that you say it, and that voice becomes something that you're known for. But the other thing that I think is important is you said 6 months. In my own mind, as you were getting ready to state that, I was going to say 6 months as well, and I'm glad you said it, because too often I feel that people get started into an effort, and I don't care what the marketing is, whether it be content marketing as we're discussing it now, or as you said earlier, going to a networking meeting. Regardless, there is a staying power. People need to see that you're in this for the long haul. And really, for the first little while, people are just seeing, do you stick around? And so that stick-to-itiveness really is what pays off after a period of time. And it becomes easier for you anyway. So after 6 months, the routine of it is now, it's more subconscious than it was initially. And so what you're doing takes less time, less energy and effort. Now you're able to be out there and seen as that expert. And that's where you're going to now get the notoriety that you're needing from a marketing point of view.
Mm-hmm.
Yeah. So let's talk about your business. You did this, you're growing your business. Obviously, you see that fast growth, but what problems did you face growing your business, especially where you chose to do it virtually?
Oh, wow. Man, what problems have we not faced? I recently started the podcast.
It's a loaded question.
Yeah. And I actually recently started a podcast on this premise that I, as a business owner, feel very alone. Like it's very lonely at the top. Running a business, you feel like you're on an island, and very often you'll run into problems that you just think it's the end of the world, and you really need, what has been good for me is to have some sort of coach or mentor that is already 10 steps ahead of me. Like I've got a coach that runs a mid 8-figure firm, mid 8-figure firm.
Yeah.
And he is phenomenal, because I'll run into issues and I'll call him up and he'll just laugh and be like, man, I wish that I had those problems again. And so it's just all about perspective. But what type of problems have I faced? Holy smokes. I've faced people problems, and honestly, I didn't give enough. I did not invest early enough in understanding the people component of the firm, which I know sounds ridiculous, because now I know that people is literally the biggest piece of any CPA firm. But I didn't recognize that early enough on. And so there was just a lot of lack of structure, a lot of power dynamics that were going on, and a lot of really just poor folks in our firm that just weren't performing very well and weren't really, in some cases, working. So that was always that was an interesting. It was interesting going through and making some changes and really kind of weeding those folks out. But yeah, the people problem was definitely the biggest one. But I've experienced it all, man. We've had clients. We had a client do a big chargeback at one point. I don't know if you guys know what that is, but it's where you go into your credit card provider and just click the big red button that says, "I did not receive this." Yep. I literally rolled out of bed one morning and about $40,000 was missing from my bank account, with a little statement, an email statement saying, your client charged this back. So it's been a wild ride, but I wouldn't have it any other way.
So let's take these problems as we're describing them. Let's chunk them down a little bit. A lot of the listeners may be interested in knowing, first of all, what kind of issues you faced and how you addressed them with regards to finding good talent, just hiring good people. Let's start there.
Yeah, I mean, at first it was just solely based on my gut reaction, and I think that I had a little bit of an ego too. Like, I thought that I was way better at hiring than I was. And that's a weakness now that I'm very, very well aware of. So at first I just had a few interview questions, and then what I would do, I would have people contract with me for a period of time, not like a long period of time in some cases, but in other cases for the entire tax season, and just kind of see how they work. And that was really helpful. But that really only worked through my first 4 or 5 people. Okay. And then after that, we couldn't really do that extended contracting. And that's when I'm talking about my interview questions. I thought that they were great, and they weren't that great. So we ended up onboarding a few folks that probably weren't the best fit for the firm as a result. And really mid 2019, what I did is I realized that, so when I started the firm, my theory was, I'm going to hire smart people, and I'm not going to have to manage those people. And those people don't need to be managed. There needs to be no bosses. That was my experience at PwC was I don't need a boss. I can do it all myself. Same thing at Ernst & Young. I don't need a boss. I can do it myself. I don't need somebody looking over my shoulder and directing me. Tell me what the goal is. I'm going to go crush it. That was my mentality. And I did exactly that at both places. So I take that into my business and I go, I'm going to hire people like me. And we don't need bosses. We'll be a flat organization, right? Kind of like Zappos.
Uh-huh.
And I did. I looked at Zappos, and I loved their little pod stuff and their nice little charts that they've spent probably hundreds of thousands of dollars working on. And it just doesn't work. It just doesn't work.
Did you know Zappos had a bar in their office?
Yeah.
I mean, they were free spirited, and one of the things that I can say is there's a lot of things that they did that I do not know are duplicatable.
Yeah, no, it was an awful experience. It probably cost me $1 million or so in growth. That's when I realized I have to pull the plug.
So as you run into those frustrations of onboarding the wrong people, you said the word fit. So how do you get the right fit, the right culture match? And then I'm going to have you answer that, but then I'm going to go into holding them accountable. So let's keep holding them accountable separate. How do you just get the right culture match?
Well, I think that's hard. I really honestly think it's hard because when you are growing a firm or really any business, if you're like solo, you are the culture, I mean, the culture is your principles. The culture is like how you get up in the morning, what time you get up in the morning and what your routine looks like. And so when you add people to that, you're kind of looking for people that kind of operate the same way that you do. And culture just kind of grows on its own. But the problem for me is that I went through ups and downs, like phases of, I want like a really nice culture, like a very zen culture. And then I would be on the complete opposite side 6 months later whenever we're facing a problem. And I'm like, are you freaking kidding me? How can we still be facing this problem? Now I want a culture of insane accountability, to the point where if your revenue target's 15,000 a month and you hit 14,999, don't even talk to me about a promotion or a raise, right? And so we fluctuated between that a lot because I was trying to find myself. I was trying to figure out what type of leader I was going to be, and I think that frankly it exhausted some of the people in the firm too. But it took until mid 2019 for me to really start figuring it out and to really kind of stop focusing solely on sales and marketing and growth and kind of dialing it back a little bit and really asking, where do I want to take this firm and why? I talk about it on some other podcasts that I've done, but through the end of 2019, my number one motivation was make a ton of money. That's what it's always been. For whatever, I chip on my shoulder, make a ton of money, prove everybody wrong. People that I haven't met want to prove them wrong anyway. Like, just pointless, right? But that's what kept me motivated. And then the money comes, and the problems aren't worth the money, right? So I got to this point into 2019 where I was just like, I don't even know why I'm doing this anymore. I don't know why I'm still running a CPA firm. There's got to be something deeper and bigger. And so now what I'm at is I'm at a point where I want to be happy and I want to positively influence as many people as I possibly can. So the latter part of influencing as many people as possible, that drives our growth goals. We want to be a $50 million accounting firm, but I didn't know why, and now I know why. Then the first part, I want to be happy. That's a very selfish why, right? That's a very selfish thing because I'm going to get my happiness from my employees being happy and from everybody else being happy. But then it makes you start questioning, well, how do you really drive that in the firm? And one thing that I've come to realize, really by reading Ray Dalio's Principles book, is that you just have to be honest with people. And if it's going to piss people off, then, you just got to show your true color, stop beating around the bush and just be honest with people. And the right people will form around you. And that's what's been happening for about the past year or so. I've just been extremely candid with people. So now our employees, my number one goal for 2020 is just to add a ton of clarity to the organization. So not everybody has a set, we call them vital factors, but KPIs, key performance indicators. And they all have these set targets and we measure them on a quarterly basis. And I am very hardcore about it. You miss one deadline, you get a 1. And then 1 is bad, unsatisfactory. You get a 1 for the entire quarter. So think about this for a tax prep team. You guys could be absolutely crushing it, right? And then April 10th rolls around and you miss one deadline on an extension or whatever. And now the client's mad. Well, that's unacceptable to me. And now you get a 1. But just adding that clarity has helped my team a lot too. And now they know what's expected of them. And now we can have more real conversations about performance, about what we're trying to do and where we're trying to go. So it was just a lot of unorganization at the beginning, not really knowing who I am as a leader and what I wanted to achieve and how I wanted to achieve it. And now I've got a much clearer picture of that. And so my goal is to add that same level of clarity to in all parts of the organization.
So this is just kind of a perspective view of what you just shared. I could see when you were talking about how over a 6-month period of time, your emphasis would change and some of it would be driven by outside influences. And at the end, it appears that what you've come to recognize that in addition to your goals of making a positive impact and being happy is KPIs really became that non-emotional way of governing or managing your team. There's certain expectations, they need to meet them. These are the KPIs, either you did or didn't do them. It's black and white. So I guess the question I think the listeners would want to know is, what are some of the key KPIs that are essential in your own business? What are you watching?
Yeah, so I'm going to pull it up and I'll just read them to you. What I've realized is there are KPIs at the executive level, and I know that, again, this seems very elementary, right? But it took me 4 years to figure this out. So there are KPIs at the executive level that are very different than KPIs at the associate, senior associate, and manager level. So the executive level,
completely agree. Yeah.
Excellent. At the executive level, it's more about the economics, and at the associate, senior associate level, it's more about project execution, right?
Production, yes.
Yeah, exactly. And it took me, like I said, probably 4.5 years to actually figure that out. So I have a template that I've built out. It's in Google Sheets, and I give this to each one of the staff, and there's a template per role, per staff level, and it weights performance based on the particular aspect. So, for example, associates, 70% of their score is project execution, and there's 3 categories of project execution. It's meeting all external deadlines, producing really high quality work, and then meeting all internal deadlines. So those are the 3 sections. And as an example, a 1, meaning unsatisfactory. So it's ranked 1 through 4. 4 is the best, 1 is the worst. A 4, by the way, needs to be like, imagine yourself sitting in a boardroom and a name is dropped and everybody goes, "Oh, that person's amazing." That's a 4. Yeah. So a 4 should be hard to achieve, right?
Yep.
So for external deadlines, a 1, unsatisfactory. Any project or task delivered after an agreed upon deadline. What is an agreed upon deadline? Well, if your manager gives you a task or a project with a deadline, that's the agreed upon deadline for an associate, right? And if associate, a 2 in this case, like we're stepping up a little bit, a 2 is all projects and tasks delivered upon the agreed upon deadline. But if they can't be delivered, you've let your manager know 48 hours in advance of the deadline rather than just letting it lapse, right?
Yeah.
So that was a big problem that we've had. And I was like, if this happens anymore, I'm just going to fire people because I don't want to do this. So you either hit the deadlines or you communicate proactively that you're not going to hit the deadline. So that was the big one. And the internal deadlines is very similar to that sort of step up. But then on the quality piece, any error, so a 1, unsatisfactory, any error in any deliverable discovered by a client and or errors arising from process deviation and or more than 14 review points on any one deliverable. And as we rolled this out, we had staff that were very nervous, like we had staff say, well, we transpose numbers every once in a while in tax returns. And if the client catches that, is that an error that would cause a 1? And I'm like, abso-freaking-lutely it is. But the client caught the error. Are you kidding me? Like, yeah, it's a 1. So, it's just the way that I built this out. I've always looked around for KPIs, and all the KPIs that you look at are like, they're all revenue based. They're all profit margin based. They're all, I don't know, just like email turnaround time and things like that. But that stuff was never really driving at what I was looking for. So when I finally sat down and did this, I asked, what should each role primarily be doing? An associate should primarily just be delivering every single day, day in, day out. Senior associate delivering, but also some client interaction, and a manager, a lot more client interaction, engagement economics, less delivery. And then I went through each role, and I basically just thought about all the pain that I've experienced since running this firm, and just asked the question, what really pisses me off? And those are all the ones, right? Those are all the things that became ones. So that's what it is. And you don't see any sort of revenue numbers. You don't see hours. You don't see utilization. You don't see any of that until you get to that manager level. Because I really don't want my associates or my senior associates thinking about revenue as a performance metric. I do want them to be aware of it, but I don't want them to be focused on it as the end all be all, because it's just not what actually drives value here at the firm.
So your sharing that has been, I think, phenomenal, because I think our listeners are trying to get a feel for the culture you've created and the expectations you've set. And one of the things that I can identify with is when we work with and teach our methods, it's very similar. For KPIs, what we say is, for that one role, that one position in a company, what is the single most important metric that if they hit, we're happy? And if they can have just one specific number, that's important. Now, when we do that, we always then back it up with 3 to 5 supporting metrics. And those numbers are basically that if the first primary one is not achieved, we can fall back to these 3 to 5 other metrics and identify what missed, what didn't happen that stopped us from achieving the ultimate goal. If I've achieved the ultimate goal, I don't even look at the other 3 to 5 metrics, because I don't care what's going on behind the scenes other than the one thing was achieved. But the thing I like about this is, if the primary metric is achieved and it's excelling, they're doing very well there, I also have the ability to then go back to those supporting metrics, the 3 to 5 that are behind it, and see what are they really excelling in that's helping them get the advantage in that primary metric. And so it allows me to now not just focus on the negatives when things are doing poorly, but when they keep killing it, I'm able to go in and say, well, what are they doing that everyone else isn't that's actually helping them achieve that? And then I can get back into that supporting metric number and go, well, heaven's sakes, if everybody else was doing number one like this person does number one, they'll also then get that much better results. And so I like what you're talking about with regards to key metrics. I like how you've given some ranking to it. It allows the person to realize, you know what, if I follow these things, I'll meet the objective. So that's really good. So let me ask, you're running a business. You're obviously very, very driven. You have very specific goals. At first, it was predominantly, if not only, cash flow and income and revenue. I think you're getting to the point now where you see there's a little bit more about happiness and such. What is your give back? You've got these podcasts, you're creating groups. What's this altruistic approach that you're now bringing into the business model?
Yeah, I don't really know. I just know that I want to, so many people have lifted me up and helped me out along the way. And I know that part of what I want to do in terms of my legacy, I'm only 29 years old, so I've got a long time, a long time coming here. I'm going to be around for a while. And I just want to make sure that I can positively influence as many people as I possibly can. So, you and I, Roger, were talking about it before we launched the podcast, or launched this episode. But I'm starting the Staying Power Collective, and we're doing a podcast there. And I think that that'll be a really cool way for me to kind of achieve that give back, as you put it. Help other people that are trying to figure things out, help them get past these what seem to be massive barriers, help you get over those and get moving in the right direction.
Yeah, since you brought it up, let's do a quick breakaway here for our sponsors. And let me mention that, like Brandon just mentioned, there is this Staying Power Collective that he's inviting you as the listeners to come and hear. It's going to appear at stayingpowercollective.com. I'll actually put this information in the description of the podcast for you to go get more information and reach out and actually see if this is something that you would like to participate in. Consider it kind of like a mini mastermind group where you'll have an opportunity to get some direction and insight insight from this collaborative work, and more importantly, maybe find some connections that will be helpful as you're working on your business. He's inviting you to join a community of firm owners also looking to build remote accounting firms. So go to the description of the podcast for more information on how you can take advantage of this wonderful offer. In addition to that, Universal Accounting Center is offering a book called In the Black. It's 9 principles to build your business and make it more profitable. These 9 principles to make yourself more profitable actually address the principle of KPIs and how that can be used in your business to more conscientiously and purposely run your company. One of the things that I would encourage you to do is take the time to go to the description and actually find there the link you need to get your free copy of the book In the Black, 9 Principles to Make Your Business Profitable. This book is specifically designed to help you work on your business, and in doing so, do so with purpose and intent. Now, one of the things that I'd like to do here, Brandon, is kind of branch off into a little bit of a side tangent discussion. I know you're young, but you're definitely very driven. Have you enough foresight to see a legacy of any sort at this point, or is that just too far off for you?
That's too far off for me.
Yeah, that's all right.
I've got a lot that I want to do before I start thinking about legacy.
Yeah, so let's look at being a mentor. You said you've worked with some mentors. You've got a coach. I think the world of having coaches. In fact, every program that we offer here at Universal Accounting Center comes with an assigned coach and mentor. So what is a mentor to you? What do you look for in the coaching that you're receiving?
So I have had a lot of coaches over time. And the best one that I've ever had is the one that I currently still have. He's like, 15 times larger than my firm. He's just 10 steps ahead. He's experienced all the pain, but more importantly, he's still doing business, if that makes sense.
Mm-hmm.
I've had coaches in the past that go out and get like the coaching license, and then they coach, and they're good. They're very helpful, and they do get you to a certain point. But I find I was scaling so fast that I scaled out of their advice very quickly. And so the coach that I have now is somebody that he only coaches 4 people outside of his day job, and I'm one of them. And he just doesn't have the time to really invest in the way that he would want to invest in raising people up. So that's what I look for. I think that even his type of coaching, though, when I was doing $300,000 or $400,000 in revenue, probably was not the type of coaching that I was looking for at the time. He's very good with people. He's very good with culture. He's very good with team building. And when you're $300,000-400,000 in revenue, you're not really focused on that. So I think it ebbs and flows. But now the coaches that I have now and will have in the future are the ones that have run a 10, 20, 30, 40, $50 million company, specifically professional services firm, and ideally are still in the trenches doing it themselves.
Yeah. Well, one of the things I can relate to is as you're describing that relationship with a coach is I myself, I have a coach. I've worked with a coach for a number of years, and I find that there's 3 things that have been instrumental in that relationship. One is the quality of the questions that I'm being asked. They're able through that perspective to ask things that I'm either not seeing or asking myself. And I'm grateful that they're there to ask that question that I may have forgotten to ask. The second thing is the accountability. When I meet and I say something's happening or something needs to change or there's something important going on, they're good at not only just asking the questions, but then saying, okay, therefore what? What are you going to do about it? And I declare, here are the things that I'm going to take care of. Well, they ask, okay, well, by when? And I put a timeline on it. Well, initially, when you start coaching, you just think that these are arbitrary dates that you're throwing out. Well, a good coach doesn't take anything arbitrary. They're like, okay, they're taking notes, they're holding you accountable. And the next time you meet, they're like, okay, you said you're going to have this done by Tuesday. And you're like, crap, I didn't even work on it. So you start to realize that as a coach, when you work with a quality coach, they hold you accountable and they ensure that things get done more quickly. And they ensure that not only do they get done more quickly, I think the quality of what you do is better because you have to report on it. It's not like I'm just going to get it done for the sake of checking it off. You literally, with that coach, want to be able to report back that I did it and I did it well. And I'm happy that I was able to take care of it the way I did. But the third thing is, on occasion, there have been, like you were describing, challenges that arise. And it's nice to have a coach that you can reach out to and say, you know what, I just need to talk this through. And could you just listen for me and maybe ask some questions? Because it's nothing I want to discuss with my spouse. It's nothing I want to discuss with my employees. It's not anything I just want to bring up with some layperson on the street. I need somebody that can listen and they have some background and context that they can hear what I'm saying and then maybe ask some important questions. And I've had instances where I've literally spoken things through, answered my own questions just because of, in my mind at the time, it was very, very cluttered and a lot going on. But as I had to verbally express myself, things slowed down and I was able to talk things through. And all of a sudden, I'm answering my own questions. And at the end of the conversation, the coach may have asked a question or two, but it was me that really resolved everything. And that's really what I needed. So the coach really offered those three things. And so that's why with Universal, I'm pleased to say all of our programs come with the coaching, because I think it's that essential. To just merely give somebody a program or curriculum and then say, go do it, go read the book, that's not enough. You've got to have somebody there that can coach you and mentor you and advise you along the way. So I love that. Let me ask this. Do you have a mantra or something that you use in your business that is kind of your grounding point or a focus of what you do as you make decisions?
I'm trying to think. I used to. I used to have lots of mantras. One of my mantras was "get shit done."
I've heard that one before. Yeah.
Yeah. Just do it, right? Like Nike. And no, but I think now it's really just, is this going to make me more happy or less happy? Or is this going to make me less happy today, but more happy in the future, right? Like when you have to have a tough conversation with somebody, it's never going to make anybody happy, but is it going to make people more happy in the future? Are you going to be so explicitly clear that all the confusion is gone and you're not going to have to have the conversation again? So that's kind of what I'm trying to live by at this point, is just, how do I drive more happiness into my own life? And then through that, the byproduct is going to be driving a lot of happiness for everybody in my firm.
Good. Here's the next question. And I'm going out on a limb because I don't know the answer to this one from you. So I'm asking because I'm truly curious. When you're as passionate and driven as you are to build the business that you already have, a lot of times what people may struggle with is literally the idea of balance and having some quality of life. How are you managing that right now?
There's no such thing.
I'm glad you're being honest. Thank you.
Yeah, no, look, I mean, there's no point in BSing this. It was incredibly challenging. I was working, no doubt, 80 to 100-hour weeks. I did not. There were times that I burned out, but I didn't burn out of the entire business. And the reason for that is because I honestly love it. I love it. I love every single day. I love the challenges and the problems. I'm a very strategic thinker. I'm a very logical thinker. And the problem solving that comes with every single day is just, I love it. It's like a big adrenaline rush.
Yeah.
So I will do this and just work insane, Could I have dialed it back? Absolutely. I don't think that I'd be where I am today if I had dialed it back. And I am dialing it back a little bit today. I'm actually trying to book about 50 to 60 hours a week, which probably might seem like a lot to some people, but it's way less than what I had been doing in the past. But I also don't know how I can. I have talked to a few CEOs about this, and I don't know how. I have not really talked to somebody that has told me, oh yeah, I've built my multi-million-dollar business with a 30 to 40-hour work week. So it's hard. It's really hard. And I think that you kind of make a decision on what does balance mean for you? For me, I don't need vacations. I don't need to go and like have all these incredible hobbies or whatever. Like I love what I do. I love being the top guy, the CEO, the strategic thinker. I love the problems. So for me, it's weird because the balance is the work. It is the scale. It is the promise of, we've got this rocket ship that we're on and we're aiming for the moon and we're going to hit the moon. And when I think about it like that, it sounds nuts. I know it sounds nuts to my wife. She tells me every once in a while. But when I think about it, I'm like, well, if you look at the greats out there, the Steve Jobs, the Ray Dalios, the Jeff Bezos, the Bill Gates, if you ask them the same question, I doubt that they would tell you that they found good balance as they were scaling.
No, that's the proverbial myth. It's the unicorn, right? It's the holy grail. It's a question of whether or not it's even out there. And one of the things that I think is important is every time I've worked with very successful people, I've identified 5 key things to be successful, and the first of which is passion. Every time I speak with them, there's an intensity about the work that they do. They're workaholics. They love it. They get into it. They really get passion from what it is they do, the reward of the success. Just listening to you, that's obvious. Now, the other thing that I'd like to ask then is, with regards to your business, you're in a position right now where you're growing it. What's the next goal for you? How do you see the accounting changing in the next year, for example? How are you adapting to that?
Yeah, I mean, we're always finding new applications and software that we're able to plug in and service our clients better. I think that there's been a lot of discussion. I was a CPA practice advisor 40 under 40 a year or two ago, and I went out and did this whole discussion thing with all these other people, and there's a huge discussion on automation in the industry right now.
Yep. Uh-huh.
I just think that it's a long way off. I think that it's a lot further off than people really give it credence to. I mean, I'm not going to name the specific technology company, but you've got a company out there that is basically saying, yeah, we automate your bookkeeping, and turns out they're just outsourcing it to the Philippines like the rest of us. So I think that there's still a lot of progress that has to be made in terms of automation. Now, that said, we can make our clients feel like it's automated because we can take it all off their plate with good technology. And I think that that's really the goal at the end of the day. And then the secondary goal is, now how do we work less or work more, but work on more stuff, but in the same amount of time? And we can achieve a lot of that through technology. So where do I see it going over the next year? I don't know. I mean, we're filming this in the middle of COVID too, right? So I don't know what impact that's ultimately going to have on the economy or on any sort of progression that would have otherwise been in place. But I think that we'll keep seeing apps pop up that make people's lives easier in particular areas, and I think that we'll keep seeing acquisitions like, Intuit buying up T-Sheets or something like that. Just things like that happening, and we'll see pools of these applications be bought by the conglomerates, and you'll be moving onto their platforms. That's what I see in the next few years, and I think true automation, we're probably still a decade or so out.
Wow. Good. I love that perspective. Thank you for sharing that. Here's my last question. And I don't mean it to be like a product promotion kind of thing, but I'm sure a lot of the listeners, knowing that you are a virtual CPA firm, would just be wondering what core software or technology platforms are essential in your business that's making this possible. Is there anything that you'd like to just do a quick little name drop on, I guess?
Carbon, how do you spell it? Karbon, Carbon?
Yep. Carbon, Karbon.
Honestly, when we got Carbon, I looked at it and I was like, this is too simple. But what I've realized, because I've always been about flexibility. I want technology that's super flexible that I can modify at any time and make tweaks to. But into 2019, we realized that the flexibility was actually the opportunity cost was huge, because we were spending way too much time fixing the mistakes that we were making with the flexibility. So we switched to Carbon, and it's very simple. It's very straightforward. It's not flexible. And what I realized is that's exactly what my staff needs. So Carbon all day.
Good. I love it. All right. So here's what I'm going to do. I'm going to do a quick recap of what it is we've discussed, and then I'm going to come back to you, Brandon, and just see if you have a final thought that you'd like to share. One of the things that I want to point out here is, as part of our sponsors, is Brandon did make available in the description your chance to actually go check out his little mini mastermind group that you can participate in. He's invited you to actually come and see if this is something that might be helpful to you. It is stayingpowercollective.com. With that, I would also mention that Universal Accounting Center has made available the book In the Black, 9 Principles to Make Your Business More Profitable. Get the book, see what it is that you need to be doing to work on your business to make profit a priority. Now, with those two things said, as a recap, I love what Brandon brought to the table, which is essentially the passion and enthusiasm that he has for the profession. The idea of starting and building a business can be daunting. Running a successful accounting business, particularly virtually, with the staffing issues that it can present, the management issues that it brings, all those things he's faced, and more importantly, he's addressed. And as he's done so, he's done it with a lot of deliberate intention. And I like the KPI discussion that we had. I think that's very important, especially when you're working with remote employees. They need to have very specific metrics that, when met, say they've done the job and what's expected of them. With regards to the work, I think it's also obvious that what Brandon has is very ambitious goals, and he's put in the time and the energy and the work to achieve those. And I think he was very, very honest in the fact that it does take work and it is hard. And as each of us know, as entrepreneurs, we need to put in that time and that energy. And sometimes it is that early morning, that late night, it's those extra hours. And it's because we're what I call an accountrepreneur, we're willing to put in that energy because it is about our business succeeding and our own passion for the work itself. So I love the story that we shared in this, and I hope that you've gotten some good notes, at least some good thoughts of what you can be doing to work on your business as you apply these principles in building your own accounting firm. Now, with this in mind, I do want to encourage you, if you've not listened to our other episodes, to take a moment and see what other episodes may interest you as you're working on your business, and definitely subscribe to the podcast. Get the notifications you need to listen to the other podcasts that are going to be coming in the future that will share with you tips and tricks and the realities of running a successful accounting business. So before I wrap everything up, Brandon, do you have any final thoughts that you'd like to share?
Yeah. There's a guy in the industry, Jason Blummer, that I'll quote. His big thing is, do you want what growth means? And I think that that's very different for everybody. So I want to scale. I want to grow. It doesn't necessarily mean that that's the right thing for every accounting firm owner out there. That's not the right answer for every accounting firm owner out there. So, if you're running an accounting firm, really give it some thought. Sit down, think about, where do you want to be? Why do you want to be there? Why do you really want to be there? Because if you choose scale, it's challenging. It's very hard. It's exhausting, and you have to love it. Otherwise, don't choose scale. There's nothing wrong with being a solo shop or a 2 or 3 man firm and just absolutely crushing it for your clients.
That's one of the things I love about this industry, and it's just what you said. There is no right answer. It's their business, and as an accountrepreneur, they get to decide, are they a solo entrepreneur? Do they have a small firm? Do they grow a large firm? Do they pick a niche to focus on? Do they focus on doing it virtually as you've done? All these things, there's no right or wrong answer. There are best practices. There's a good way and a better way to do each of these things, but at the same time, it's a choice that they individually get to make. So I appreciate that perspective. Thank you for sharing that. All right, so let me go ahead and just wind this down. I do want to point out that as you listen to these episodes, you can subscribe to the podcast for more information on how you can apply these principles, as well as learn more how you can work on your business and actually get the quality training, resources, support, and coaching to be successful and have, in fact, the premier accounting firm in your area. I invite you to visit universalaccountingschool.com or give us a phone call at Universal Accounting, calling 801-265-3777. Do take care. Have a great day. And always remember, if it's about accounting, it is universal. Take care.